Good afternoon, everybody, and thank you very much for joining the interim results presentation for Tracsis plc. In terms of the agenda for this afternoon, there'll be approximately 40 minutes of presentation, and that will be split between Andy and myself, and that will be split into 4 sections. The first section that I'll cover will look at an introduction, an overview of the trading period and the sort of landscape in which we're operating at the moment. Then Andy will cover the financial results for the period. I'll then cover a new section that we've added, which is looking at the growth drivers for the business, and is trying to simplify how we talk about the opportunities that exist looking forward. And then Andy will finish off with a section looking at forecasts for the remainder of this financial year. We'll then open up for questions at the end of the presentation. So in terms of the overall introduction, a pleasing set of results for the first half of the year, set against ongoing impact of COVID-19 on the business, and that impact continues primarily in our traffic data and events business units, on a very similar level to how we were impacted at the second half of the last financial year. Alongside that, we've had really strong growth overall in our rail technology business. We've got a record pipeline of opportunities at the moment, and we also have a significant level of activity going on right now in terms of delivering a number of multi-year software contracts that were won in previous periods. So that has been great, and we continue to see really good prospects on that side of the business. Q3 trading is very much in line with expectations. As I've said, we've got high activity levels across large parts of the group, and importantly, the financial position of the group remains healthy. We have a strong cash position, we don't have any debt, and we continue to remain very much focused on driving future growth, both from organic perspective and also through acquisition. For those of you that are not familiar with the Tracsis business, we basically report in 2 different segments. So the first segment is our rail technology and services segment, which is heavily software and product driven, so high levels of recurring revenue, and it's where the origins of the business are built around. So that focuses on 3 core areas. There's operations and planning, which is very much around providing software to train operators. It's around digital railway and infrastructure, which is around provision largely of software and products into infrastructure providers, so companies like Network Rail. And then we have a customer experience grouping, which is really related to retail and ticketing and automated delay repay. On the data analytics, consultancy and events side of the business, which is much more services and people driven, so it's much more large project based, it's not recurring revenue, but it's what we call repeat revenue. We've got 4 segments on that side of our business. We have our traffic data survey business, we have our event traffic management business. They were the 2 most hard hit by COVID-19. We then have a data informatics business, which is focused on data analytics and GIS. And then we have a transport insights or consultancy business. And the bottom 2 are deliberately drawn across the page because they actually offer services that not only are delivered through our traffic data and event traffic management businesses, but also complement very much what we do on the rail technology side. In terms of the landscape, in terms of revenue for the period, if we start in the bottom left-hand corner, you can see the impact that COVID has had on our traffic data and event traffic management businesses. So you can see, by comparison to this time last year, we've got event traffic management, for example, now only accounts for 10% of our total group revenue, where it was 21% this time last year. And similarly, traffic data is 14% when it was 20% this time last year. But on the flip side, you can see in the top 3 boxes, you can see the impact that's had in terms of the ever-growing proportion of rail software, the growing proportion of remote condition monitoring, and the growing impact of data informatics. Now, that mix will change a little bit again when we go back to more normal post-COVID conditions. But however, the trend across the top 3 boxes are very much something that we think will continue because they are the 3 areas where we're focusing most of our growth activities right now. And we'll cover more of that in detail later in the presentation. This slide just gives you a sense of what's going on that hasn't been RNS'd, because there's lots of things that happen in the organisation that aren't necessarily of a size or scale that warrant a sort of formal external announcement. And some of the things just to pick out on here. So if we start in the top left-hand corner, obviously our events business has been hit hard by COVID-19. However, The team have done a fantastic job in finding new work and utilising the skills of the team to good effect. And one of those has been in supporting the rollout of COVID-19 testing and vaccination centres. And you can see an example in the top left-hand corner of what we've been doing in the Manchester area. In the bottom left-hand corner, Network Rail have publicly pushing a very high-profile programme called Planning for Delivery. And our on-track business has been part of that project. And it's about how do we use digital tools to actually significantly improve safety on the railway. So that means less near misses and also importantly, significantly reduced fatalities. So that's a great example of using our expertise, our knowledge and our products to real effect across the industry. Compass Informatics in the middle of the page is our data analytics and GIS business. They have grown over 15% in the first half of this year, so seeing really strong levels of demand for their services. Interestingly, they've developed a very novel product in the period, which has gone live with 3 water utilities. And that product is all around geographically monitoring the movements of assets. So in this context, with a water utility, it's around sludge, which is a byproduct of water treatment, which is allowed to be used in agriculture. But to use it in agriculture, there's some very tough guidelines that have to be met in terms of the regulatory environment. And it's a Compass Informatic product that's used to provide that level of governance and to confirm that the water utilities are meeting their objectives. That's just one example. We think there are numbers of examples across the transport space, across the environmental space, where we can bring Compass's skills to bear. And that's an area where we'll talk about that more in the presentation. It's an area where we think we can really grow that element of the Tracsis group. And then on the right-hand side, Tracsis Enterprise, which those of you who are familiar with us will have heard us talk about before, that is now starting its go live rollout. So you can see here there's 2 announcements from C2C and from Transport for Wales. They've both adopted just one module, which is part of the broader product. The overall Tracsis Enterprise suite has 4 modules, and we'll talk about that a little bit later, but we now will go live this summer with 3 end-to-end deliveries of that product. So that's a really important stepping stone for us in terms of demonstrating what benefits that product can bring to the rail industry. Just focusing a little bit now on the current situation and then what the outlook is for the 2 sides of our business. So on the rail side, we continue to have a business model that's very robust. Although passenger numbers continue to be around 30% of their pre-COVID levels, we haven't seen that yet directly impact our business model. And the reason for that is that most of the products that we develop have got some element of sort of key operational performance impact to them. So in other words, you need them whether you're running a service with very few passengers or you're running a service with many thousands of passengers. So as a result, we, over the period, have seen all license renewals secured. So March was our big renewal month. Every single renewal that we expected to land has been secured. And all of the large projects that we have been delivering throughout the period are continuing. Now, there's a lot of scrutiny on those projects at the moment because the DfT wants to accelerate the implementation of those products because they are very aware of the benefits case that they'll get from those. So we've got a huge period of activity coming up with all 3 large Tracsis Enterprise projects that we're currently working on, all going live, starting from 2 weeks' time and ending at the end of September. So that will be a great showcase for us as a group. But importantly, it's also very important that we get the delivery right in the next few months. Alongside that, we've also probably got a record pipeline of opportunity at the moment, primarily driven from both a combination of train operators and Network Rail. But we're also starting to see a number of international opportunities, which, although only numbering 2 or 3 in total at the moment, are encouraging in terms of giving an indication that our products may well be relevant in international markets. We also continue to have 2 large contracts that we've been awarded, and we're just waiting now for the final contract signature so that we can announce those 2 important wins. They are both multi-year software contracts as well, which just further strengthens our portfolio. In terms of the outlook, the long-awaited Williams review is expected to be published after the May local elections. From what we understand of that, it will very much focus on improving the customer experience. By that, we mean focusing on better on-time delivery. It will focus on more customer choice, better value tickets for customers, and it will ensure that there is a real focus on making sure that there were robust timetables and that ultimately the overall rail experience continues to improve. So on that basis, we see no reason why the products and services that Tracsis offers aren't very well aligned to the outcome of that report. So I think that will give real clarity to the industry and should further reinforce the fact that we've got some really strong and important products well aligned to the future direction of the industry. On the other side of our group, it's really about the bounce back from COVID. So our traffic data and events businesses have both continued to find things pretty tough over the last 6 months. We have had some ongoing project work, which has kept reasonable activity levels, but nowhere near the historic norms that we would expect. The really interesting development in the last few weeks is that inquiry levels in March, for the first time in 12 months, were back to historic pre-COVID levels. So it certainly looks like there is increased optimism in both those markets now around what the future holds. And although we can't be absolutely precise, for example, on when large events will return, there is certainly significant demand from July onwards for events to take place. So we've been deliberately cautious in our H2 forecast because clearly we're not quite sure exactly where that will land with our year end being on the 31st of July. But that's really encouraging from our perspective that things are returning to normal. The benefits of the furlough scheme to us is that we've actually managed to maintain a significant proportion of the skill set within the group. So we only had to make a very small number of redundancies. And as a result, we have the capacity and we have the skill set readily available to bounce back as soon as that work returns. So that's an increasing positive on this side of the group. The real bright point on this side of the group is our data analytics and GIS business. It's a business called Compass Informatics, which is based in Dublin. They saw 15% revenue growth in the first half of the year. They've got a very strong order book, and hence we're looking at a range of options to further accelerate that growth. And we see no reason why we can't expand that capability into our rail technology businesses as well, where we see that there are some opportunities to exploit that capability as well. And then the final point to note on this side is that we also launched a new transport consultancy on the 1st of March. That will be the vanguard for our new brand, which is now going to be group-wide. So the new brand rollout will take place and be finished by the 31st of July. And that, we hope, will open up some new opportunities for us by being almost like a showcase for what does the Tracsis Group do, and demonstrating to our clients that we've got a much broader set of service offerings than the number of people are aware of. So that concludes the introductory section. Andy, can I hand over you now to go through the financial results, please?
So revenue of £22.2 million was 4.1 million down on the first half of last year. And the big driver here, as Chris mentioned, was really the effect of COVID. So that was mainly in our traffic data and events businesses, and to a smaller extent, and the only part of the rail side that was really directly impacted was on the transactional delay repay business. And those three businesses in total delivered just over £6 million lower revenue in the first half of this year compared with H1 last year. Leaving those to one side, there was organic growth across the rest of the group of 5%, and that excludes the contribution from iBlocks, which is the smart ticketing business that we acquired in March 2020. Including iBlocks, rail technology and services continues to show good growth, and revenue there was up 11% in total. And despite the overall revenue headwinds, we delivered an adjusted EBITDA number of £5.4 million, which is very close to what we did in the first half of last year. And that includes the benefit of the cost reduction actions that the business took, which are tracking in line with expectations. In terms of the balance sheet still remains very robust. Cash balances of £20.8 million at the half year. There's no debt, and we haven't been deferring anything under any of the COVID support schemes. Just looking at the income statement in a bit more detail. So the 16% reduction in revenue, the walkthrough of that is a 6.1 million of headwinds from COVID, as we just discussed, partly offset by £1.3 million contribution from iBlocks, and the remaining £0.7 million is the 5% growth across the rest of the group. And that was really driven by strong performance in remote condition monitoring in rail and in the data analytics and GIS business on the other side of the group. Adjusted EBITDA includes in total £1.3 million year-on-year benefit from cost reduction actions, and a further net support of £0.5 million from using the UK furlough scheme. And the statutory measures that are shown on the page here also reflect increased non-cash charges relating to the amortisation of acquired intangibles from the Idlocks acquisition and unwinding the discounting on the contingent consideration. Just turning to the divisional performance in a bit more detail and taking Rail Technology and Services first. So the rail side of the business continues to perform well, and overall revenue growth of 11% demonstrates how resilient this part of the group is in the face of reduced passenger numbers driven by COVID. And that's because most of the revenue in this part of the group is actually driven by the operational requirements of running the railway and isn't directly linked to passenger numbers. Margin in the first half was a little lower than we'd normally expect it. That's really a phasing effect and reflects the timing of milestones on some of those large development contracts that Chris mentioned. That will unwind in the second half, and we expect the full year margin to be in the mid-30s that we typically expect to see on this side of the business. And overall, activity levels on the rail side remain high with a significant pipeline. On the data analytics, consultancy and event side of the business, the revenue decrease is driven by events and traffic data. But within that number, we did see good growth, almost 15% on the data analytics GIS business. And despite the revenue headwinds, we held adjusted EBITDA almost exactly in line with what we delivered in the first half of last year, including the benefit from the cost savings and the furlough support. And finally, turning to cash flow. So as I said at the start, our balance sheet and our cash position remains robust. We generated nearly £3 million of cash in the first half, no debt and no deferrals. And this leaves us well placed to continue to invest in growing the business. And I'll pass you back to Chris to go through the growth strategy in a bit more detail.
Okay, thanks, Andy. So this section is a section that we've newly added to the presentation, which is really to kind of simplify or try and simplify where we see the growth opportunities for the group moving forward. So there are 5 core areas that we see as the key areas of growth of the group. Where you see them color-coded in green, that relates to rail technology and services. And where you see it in blue, it relates to our data analytics consultancy and events side of our business. So in the rail side, it's all around product and software opportunities. And on the data analytics and GIS side, it's about capability. And on all these different areas, there's opportunities for both organic growth and for acquisitive growth, and both remain equally important. And so there's one slide on each of these, and they all have the same format. So I'll just take a few minutes to explain these. And these will evolve over time to give a better sense of the addressable market that we think is available to us, and also what share of that market we think we can grab a hold of over the next few months and years. We're still working on that analysis, but that's ultimately where we want to get to on each of these slides. So if we start with this first one, it's around operational performance software. So this is very much linked to train operators and how they run the day-to-day railway. And the demand is really driven from the fact that the legacy systems that are used across the industry are typically underinvested and are poorly integrated. And so there's been a real push across the industry to look at, can you bring those systems together into a single platform where there can be a single source of information from everything from timetabling, through resource planning, through work allocation, through payroll, through how you recover a service, through control and control decision support. And to do that, the team came up with an idea about 4 years ago now called Tracsis Enterprise. So Tracsis Enterprise is a high availability cloud hosted system. It's modular, and there are 4 modules. And so some train operators will take all 4, others will take 1 or perhaps 2 modules. And it's equally appropriate in both passenger and rail operations. Now, up until this point, it's been the passenger sector that has dominated the demand for this product. So we've got 3 multi-year contracts that are under development. They all go live this summer, starting later this month towards the end of April. And so hence the focus for us is really all about delivery. And if that delivery goes well, that gives us a perfect platform for this product to expand into other users. Over the last few months, we've started to see the freight operators start to take a significant interest. Now, they are private operators, so they don't go through the DfT for funding approval. And what they have seen is their landscape change quite significantly over the past few months, where They're seeing more operational capacity open up because obviously passenger numbers are less and hence there are less passenger services. So as their systems get more and more complex, they're looking for technology to help them cope with that level of additional complexity. And so we're now starting dialogue with 2 or 3 freight operators about how we could expand this product into the freight sector as well. So really interesting and significant opportunity for us, and one that through this summer will really come to life through those 3 contract deployments. So that's just one of our growth vectors. And many people just think that's really the key one for Tracsis, but there are other areas as well. So the second growth vector is around remote condition monitoring. So we've got a business called MPEC Technology, a long-established business that provides remote condition monitoring equipment into the industry, with Network Rail being its largest client. Really, the driver historically has been about real-time asset tracking and making sure that you can almost predict failures and hence dispatch maintenance crews in advance of a failure and prevent delays across the network. But we are seeing other drivers now as a result of COVID. We're seeing a driver to move towards more condition-based maintenance. So rather than having a frequency-based approach where you're sending people to look at an asset on a regular time frame, you actually move to putting people out only when you start to see issues with the deterioration of that asset. So that leads to more efficient deployment of people. And it importantly also leads to a safer network, because the less often you can put people out onto the railway, the less opportunity there is for people to get injured or killed in that environment. So those are seeming to be also important drivers now. And what we're also seeing is opportunities for growth, not just in the UK, but internationally. So the Tracsis solution is that we have rail-approved data loggers and sensors, and they monitor asset performance across a whole range of items, from level crossings to switch machines to track circuits to high voltage installations, and also now into signaling systems. And the important thing is that we have our own web-based data acquisition platform called Centrix. And what that enables us to do is to have a differentiator in the market, because we're able to offer both the software and the hardware solution, which is unique. Nobody else has that combination. So in terms of our progress to date, we've got 19,000 installed units. We've taken and measured over 10 billion different data events collected from across those different installations. Network Rail continues to place a significant number of orders with us as they look to increase their coverage in the UK. And currently, we believe about a third of the network in the UK is covered with remote condition monitoring, so still a significant opportunity for growth there. And as you will have seen, we announced a few weeks ago a contract win in the US with a large transit agency. All the historic wins we've had in the US have been in the freight space. This is the first one that we have won with in the passenger sector. And obviously, hopefully this will become an important stepping stone for us in terms of looking for future growth and future opportunities in that market. The third growth area is around risk management and safety software. So this is the products that are developed within our on-track business unit. And the industry drivers here are very much around improving safety. So it's around how does Network Rail and others reduce the number of near-miss incidents and fatalities that take place on the railway. And one of the key topics of discussion has been around how can software play an increasingly important role in delivering digital workflows that join up all the activities that go right the way through from advanced planning that might be 2 or 3 years in advance of work taking place, all the way through the training, the deployment of people onto the railway, and then all the ways in which that work is digitally signed off and digitally approved. And our key product in this area is something called Rail Hub, which has been developed to do all of those things that I've just mentioned. So it's currently used by 15,000 users across the rail infrastructure and maintenance sector, but we think there's significant opportunities for growth here. And in particular, at the moment, we're involved in a lot of development under license work, looking at how we can adapt and move that Rail Hub platform forward for wider adoption in the UK. So again, a different growth vector from the previous 2, but nevertheless an important one for us. The fourth one is in a different area completely. So this is in ticketing, smart ticketing in particular. So we bought iBlocks in March of 2020. And the part of it, the business that excited us the most, was their ticketing offering, which is a pay-as-you-go system. And we believe strongly that in a post-COVID environment, people are going to want to purchase flexible multimodal tickets. And by multimodal, I mean that you can use them across the underground, across bus, across train, potentially on things like riverboats as well. and hence they just allow you complete freedom of travel without actually purchasing a ticket. So the SmartTIS platform that we have within the group is a unique account-based ticketing product. Depending on how it's set up by the client, it can be set up either with a credit card, a smart card, or using your mobile phone. And it is tied to you as a person. So it knows your profile, it knows when you travel, it knows what discounts you're entitled to, it knows how to automatically credit delay repay to your account should your train be late and be entitled to delay repay compensation. And it gives real flexibility to the customer. So we think this is an area that has got really exciting potential ahead of it. It's already deployed on 20% of the UK rail network, which is in the southeast of England so far. And we are currently in the final stages of a contract award to apply this technology in a completely different part of the UK. And it's a very novel application of it. So we think this is something that will really grab the interest both of the consumer and of the wider industry over the coming years. And then the final growth vector is in our data analytics and GIS business. So this is our Irish-based business. And what it specializes in is helping organizations that are very data rich make better decisions by using that information more efficiently and more effectively. And they also operate or help clients who work in heavily regulated industries where you have to understand where your assets are used. You need to geographically tag them. You need to understand how those assets have been used and how well they perform. Now, to give you an example of the type of things we do, if you can see the picture in the top left-hand corner, we've developed a product that's used in Ireland, which is called Rate My Service. And what that product does is it knows where you are geographically as the user of your phone. And it actually encourages you to provide feedback to the public transport operator in Dublin as to the state of assets or anything you might find across that network. So if you've seen vandalism, you've seen poor hygiene, you've seen damage, or you've seen antisocial behavior or whatever it might be, you can report that through the app. And then the app is then aggregated, the data is then aggregated back to the operator, and the operator is then able to take action in response to that information. So that uses a range of mobile app skills, data science skills, GIS skills, all of which sit within our Irish-based team. And that skill set is applicable for use not only in the transport sector, but into the utility space and also into the environmental sectors. So we think that's an area that is a really interesting area that we can expand. In particular, this part of the business has grown over 15% organically in the first half of the year, has a strong order book, and is seeing strong demand for its services. So we think this is a really interesting growth opportunity that compensates many other parts of the Tracsis group. So they're the 5 growth vectors as we see them. We plan moving forward to tie a lot of our communications around these 5 areas so that it becomes very clear to see what we're doing either from an acquisition point of view or from a contract winning point of view, how they align with those areas of opportunity for the group. So Andy, do you want to just walk everybody through the final section of the presentation, please?
Yeah, will do, Chris. And to start with, I just wanted to cover the acquisition of Flash Forward Consulting that was completed in February. So this is a UK-based consultancy business, and the strategic rationale for this for us was really 2 reasons. Firstly, it expands our capabilities on the consultancy side of the business, particularly in the bus space. And as you may have seen, that's an area that the government have announced is strategically very important for them, and there's quite a lot of investment going into bus over the next few years. And the other opportunity for us was really to increase and extend our reach into some of the senior stakeholders across the transport space. So Alex Warner, who founded Flash Forward and has come across to run our consultancy business now, is extremely well connected at senior level across these stakeholders. So it gives us a great opportunity to get closer to these influential bodies and to really understand what their issues are and how Tracsis can help them to address those. So as well as an opportunity to grow the consultancy revenue within our business, the consultancy part will also act as a shop window, if you like, for Tracsis going forward, to be at the vanguard of our new branding and actually help our customers to understand the breadth of products and services that we offer. So right now we've got high activity levels across large parts of the group, and this pipeline, which covers a lot of growth vectors is what gives us the confidence in the future growth prospects for the group, and that as we head into next financial year, we'll get back onto the growth trajectory that the business was on prior to the pandemic. And I think the important point here is that a lot of these opportunities are right across the group. They're across all of the 5 growth vectors that Chris just talked us through. So we're not beholden to any one customer or any one growth driver in particular. On the rail side of the business, we are implementing a number of large software contracts that were won in previous years. We've got 2 more that are close to the final stages of contract award. And all of these are multi-year opportunities that will support growth in recurring revenues. And we're seeing a pipeline of opportunities, both in the UK and some internationally, that cover all areas of the rail business. For the data analytics, consultancy and events division, the data analytics and GIS business is performing extremely well, and we've got a very strong pipeline of opportunities, and we're looking for ways that we can accelerate growth in that business. We are expecting to see a bounce back in traffic data and events as we recover from COVID, and we're already starting to see encouraging signs there, even if the timing of that is somewhat uncertain. Talked about on the consultancy side, we've acquired Flash Forward to expand our capabilities there. And all of this is kind of knitted together by the launch of the new group-wide branding that was announced earlier this year and will be completed in the summer. And that's important for us, not just in helping to drive collaboration within the business, but also in terms of making sure that our customers really understand the range of products and services that Tracsis Group offers. And all of this is underpinned by a strong balance sheet and continued focus on M&A and on investing in the next generation of software and technology products. So to wrap things up, we're pleased with H1 numbers, which we think are robust and resilient in the face of some challenges. We're heading into Q3 with some good momentum in the business, and trading so far is bang in line with our expectations. We've got probably record levels of pipeline activity across a number of growth vectors, and we're well positioned against the 5 key industry drivers that Chris talked us through before to continue to deliver sustainable growth. So for us, our overall growth and investment plans are unchanged. We're focusing on delivering organic growth by delivering the pipeline of projects and converting that pipeline of opportunities, and supplementing that with investment in M&A, particularly focused around high quality, high tech, cash generating software and data analytics and GIS businesses. So that concludes the formal part of the presentation. We're happy to open it up for questions. So I'll hand back to Tamsin to coordinate that for us.
And we have a question here which asks, could you comment on competition in each division?
Yeah, sure. So the competition is really broken down according to those, really in line with those 5 industry growth areas that I spoke about. So if I just step through those, in the operational performance software space, that's the area where we probably have the most competition. So in that space, we have some long-term legacy software competition in the form of a company called Atos Worldline, who are probably the biggest player in that sector. But then there are a number of other specialist suppliers that either provide or supply single components that compete against us, or provide multi-parts of the solution that we can supply. But Trax Enterprise has been developed on the basis of nobody's been able to stitch all of those different component parts together. So it's a complex problem we're trying to solve, and it's one where we think we've got a distinct competitor advantage, but one that we need to be conscious we need to stay on the front foot with. If you look at remote condition monitoring, there are 2 primary competitors to us. But neither of those has the data acquisition platform that we have. So we think we've got an edge in terms of being able to offer both the hardware and the software. With our safety and risk management software, we think we have a unique product offering. We haven't seen anybody else in the market who's able to offer that end-to-end solution. And similarly with smart ticketing, from all the research we've done, or all the due diligence we've done, we haven't seen anybody else offer that same specific type of product. And then if you look in our events business and our traffic data business, they both have competition. But in both those businesses, it's really all around building your reputation and then continuing to win repeat work with those customers because because of the high quality of delivery that you do on an ongoing basis. So every one of our businesses has a different competitor landscape. It's something we're very conscious of, and we're actively working all of the time to try and make sure that we've got something that just differentiates us and gives us that opportunity to, exploit the potential that we know exists across the organisation.
Great, many thanks. And can you comment a little bit on the international market's growth opportunity?
Yep, sure. So you'll all have been aware that historically the group has done remote condition monitoring work in North America. That work historically has tended to be in the Class 1 freight sector. And the projects we've announced recently is the first time we've won any significant work in the passenger arena in North America. So we've got, I think, 3 other trials ongoing at the moment with other large cities. We obviously wait to see how those trials will develop. But the one we announced recently, there is a significant amount more work there if these initial deployments go well. We deployed the first 5 major sites, I think it was last weekend. And so what this client has done is they've got Centric sitting behind their firewall, which is their data acquisition platform. And then there are a number of sites identified where they want us to now install remote condition monitoring equipment. So I think what will be really interesting to see is how that one large city deployment develops, whether the other trial sites then follow suit. And if they do, then that will give us a really interesting opportunity to potentially move forward and put some permanent investment into North America on the basis that it's a sustainable market for us. The other opportunities we're seeing are in Australia. We don't currently have any plans to put any kind of presence in Australia, so we're working with local partners on those projects, and those local partners will represent us should we be successful. But they're the 2. It's the remote condition monitoring opportunities that are currently growing or currently leading our international pipeline. I think anything else that we do will probably be driven more from an acquisition point of view in international markets, just because the nature of those markets and quite often how there'll be a unique local software solution that's provided rather than us trying to provide or export one of our solutions that we've developed in the UK. So we're cautiously optimistic about international. It's the biggest amount of international opportunity we've seen at any one time. And we're obviously really keen to try and exploit that, especially in North America.
And could you comment on pricing power? The gross profit margin has risen, suggesting strong pricing power for now. But what's the outlook here?
We keep a close eye on pricing, and I think we have to look at that as an opportunity to continue to drive margins in the business. As Chris said in answer to the first question, in certain parts of the business we are operating in a very competitive place at the moment. So we price competitively in order to win market share, and then we can look on a longer time frame to really leverage pricing to maintain and grow margins. So it is something that we keep a very close eye on. It's slightly different in each of the different parts of our business, but it's we're not seeing too much input cost pressure just at the moment, but we have to keep a close eye on that as well. So it's certainly something that we're tracking closely.
Great, thanks very much. And that's the end of questions. Chris, do you have any closing remarks?
Yeah, I just want to say a huge thank you to the team, really. This is very much a team effort. Max, who was the previous CFO, was a key part of that team through the first half of this year. And he and Andy obviously transitioning afterwards, obviously Max, Andy, myself, so a huge thank you to all of the guys that work for us. It's been a pretty tough time at times over the last 12 months. But we've worked really hard to protect jobs and to keep the financial strength of the group. And I think everybody can be very proud of what we've achieved. So that would be my concluding remark, really.